Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, we just had some news. I'm sorry I'm a little bit late, but a bunch of things going on. Probably some that you don't want to hear about. But we did have some news here. The retail sales a pretty major piece of information. U.S. retail sales month over month, spot 4 versus the expected spot 6. And core retail sales month over month, spot 4 versus the expected spot 5. So retail sales slightly lower than expected, and this did cause a pretty big spike upwards in the treasuries, but it was very brief, and they are basically back to where they were. So that's interesting. We also had initial jobless claims slightly higher than expected, 217 versus 210. So far, the data, except for the jobs numbers, which I'm still super skeptical about, and I'm not sure I'll really want to see the yearly seasonal adjustment in February, right? then yeah, I think we'll have a better view of employment. But most of the data, other data that we've been having coming in, is kind of looking a little light. It does seem to me that, like, in the November-December period, that we experienced a little bit of a softer economy than we wanted. That doesn't mean that it's not going to pick up after Trump's inauguration. That's kind of the big thing. Is I think that there are a lot of businesses holding back, looking to see if there's going to be any day one inauguration moves on Trump's part. Right? So that's kind of where we're at. I think that we will get some good flows today, though. I think that we will get some good flows. I think I'd still be leaning on the long side, but the way that played out kind of makes me concerned that it might be limited. So we may spend a little bit more time programming today. We'll see. By the way, good morning, Ray, Octavius, Word, A. Paul. Let's come and look at the charts. Okay, we do have a rollover in oil. Let's change this one over here, but really quick. CLA. No. Oil. March. CLH, that's right. Okay. So here we got our volume profile. Pretty big move up yesterday, but they did kind of consolidate. A little bit of a pullback overnight and a jump on this more recent news. And let me skip ahead to the Japanese yen. The Japanese yen looking a little bit stronger this morning, although there is also a little bit of a rise in the dollar going on here. But they expect the Japanese central bank to raise interest rates again. So that's causing the yen to be relatively strong. S&P 500 had a pretty good day yesterday. Nothing too crazy, though, and we're still just kind of within this mess. I suppose that the chartists would probably look at this and be like, hey, this is the top of the range. But I wouldn't bet on that. Not saying that this is the top of the range. It's not a very reliable indicator. Oil still pushing here. Oh man, oil looking really strong after that jump yesterday, huh? Gold and silver kind of on the upturn still. Kappa. Kappa pushing to new highs, but giving them back up very, very quickly. And Bitcoin, oh, well, okay, a little bit of another little bit of a jump. You know, Bitcoin is celebrating that they held 90K, but with the way that this has been lately, you know, they'll kind of like toy around with it forever, and then when it finally breaks, like it really breaks. Because you got these guys that are like holding on for dear life, right? Like they really don't want to give in, and they don't give in until they're basically forced to. So Hindenburg, yeah. So something that happened yesterday worth noting is that the head of Hindenburg Research has written an open letter to the public, basically saying that he's going to wind down the fund. He pretty explicitly says that it has nothing to do with any of the lawsuits that they're involved in or any of that stuff. But the thing that's more interesting to us is that in the thing, in the letter, he says that they're going to like make public everything about their methodology. So, like, he's going to make videos and stuff about how they did it. So that's really cool. I really like that. Okay, it looks like the treasuries are making a pretty good push back here to the highs. So maybe I'm wrong that you know, concerned about that upside being capped a little bit, because we are well, yeah, in the 5-year we're jumping across those cost bases as market maker positions. Over here in the 10-year, the buy side is at 0.7 from the overnight. So you cannot tell me that $80 oil is not inflationary. Well, oil is inflationary. I mean, when you go and you look at, I mean, we had PPI and CPI, and that reflected a large portion of those increases in oil already, right? It's not necessarily like dramatically so. Like, so here again, remember, okay? You've got the economy, okay? And if I dump more money into it, okay, doesn't make the amount of goods and services increase, just kind of overflows. And that's what creates inflation. If I go in, I make this portion larger, what it does is it just shoves out these other sectors, right? So oil goes up. To some extent, that is just going to come at the expense of other goods and services. Now, oil is a little bit special because oil is kind of an input to everything. So it does have a mildly inflationary effect, at least at those levels. I've still been hearing 85. The thing that's kind of interesting about the oil move to me is that the main catalyst I'm being given is more strict enforcement of sanctions against Russia. So yeah, oh, there you go. Amir says saying the same thing. So a lot of people, I really don't know how this one's going to go, but a lot of people seem to think that Donald Trump is going to come in and just like immediately defuse the Ukraine situation. Well, if he did, and we were immediately take off sanctions against Russia, then that should probably come back down, right? Maybe. But I don't think that $80 in oil is enough of a reason on its own to see interest rates rise, for instance. Like, my thinking at the moment is that interest rates are pretty likely to stay where they are for a while. and that there is a slight risk that we have to decrease them again. That some weakness shows up in the economy that takes us by surprise. I'm personally more concerned about the downside than I am the upside right now. But, if we get like certain geopolitical developments, that changes very quickly. It's kind of the same thing with tariffs, by the way. It might not seem like it, but we do not get everything from China. Okay. So you might have 1/3 of the economy or of prices of things increase in price, and that will have to come at the expense of other things in the economy. And especially since the economy is super, super tight and everything. And like, I'm telling you, man, job seekers, it's like the unemployment rate is super, super low, but the people that are looking for jobs right now are having an extremely difficult time. The stories that I read on Reddit are just absolutely bonkers. Just crazy stuff. Okay, it's rough out there. There's not a lot of room for people to just all of a sudden start spending more for things overall, right? Unemployment rates are, so. Yeah. Unemployment rate is historically low. I don't know how you wrangle that any other way. The headline unemployment rate is historically low. And you remember that this comes from the household survey. So it still has other measures that are things like underemployment and things like that, like people that want to have jobs but don't have them, essentially, and not just people that are receiving unemployment. That's one mistake that a lot of people make, is that they think that this is related to unemployment claims. It's not. That's something different. There's one of the survey questions is, are you not working? You're working part-time, but you wish that you were full-time, or something like that, right? All of that stuff is in the data that you can look at, and by pretty much every measure that we can look at, the unemployment rate is really low. Here's the not in labor force. Oh, this is in thousands of persons. That one's not going to help you. Need one that is not thousands of persons, but is rather like a percentage, right? The problem with that last one See here, they got like want a job now, marginally attached to discouraged workers. Okay. Oh, that one's historically low. Not in labor force. But the problem with this one is that, you know, the population is constantly increasing. So this number is constantly going to increase. So you'd have to look at it as a percentage of the population. Let's see. There's probably a lot of people that aren't working because they don't need to also. So that's the thing. But I digress. This whole thing is that the headline employment numbers don't really reflect the experience that job seekers have right now. Because while there are not a lot of people out of work, there's also not a lot of job openings. So I do think that that's something that can like very quickly spread. Like one of the things that I'm seeing happen, this is what I think is going to happen, is you got like big tech companies, companies across the board that have basically decided we are going to slim down because of high interest rates and everything, especially these companies that they rely on debt. But even, you know, companies like Google, you know, they have like insane cash reserves. And what are they doing with it? They're just giving it back to share. They're buying back shares with it and things like that. They're not hiring people with it. They've essentially decided to reduce costs as much as possible by reducing their workforce as much as possible. And now they're all telling themselves that we won't ever have to size back up because AI. They think that AI will resolve it for them. And I kind of think that what's going to happen, there's never been a time in human history where efficiency improvements result in lower demand for labor. It always results in a higher demand for labor. People might be displaced from one industry to another, but it has always in history resulted in the demand for workers going up. I think this idea that we're going to use LLMs to replace everybody's job to be fantastical and quite frankly ridiculous. I really do not believe that the LLM technology on its own is capable of doing that. Maybe you have an additional development on top of that, combining it with something else. But the LLMs on their own, they're just not able to do this. I'm sorry. So, but it does make workers more productive. Like productivity is going to go up. And again, like the productivity going up, that tends to result in more opportunities and more businesses created and a stronger demand for labor. So I think that what will happen is all of these companies are eventually going to find that AI is not enough to do what they want to do. And then there's going to be a mad dash for workers. And the companies that were the most brazen about this sort of a thing, Facebook, are going to have a really hard time hiring people. That's what I think is going to happen. Was as job seekers have experience, not a lot of job openings. Well, if job seekers have experience, they should have work. I don't believe things are cherry sweet. No, I mean, that doesn't make sense. I tell you what, there's a lot of really contradictory things in the economy, though. Like, there seems to be a shortage of experienced developers, but I see a lot of very experienced developers that are even more experienced than me having a hard time finding work. And then they're not really creating juniors, which is really kind of like, man, I really think that some companies are digging themselves a hole. Yeah, you need experienced developers, but you're not willing to you're not hiring any new people, and the newer people that you do have, you're not really giving them opportunities to become more experienced. You're not really giving them opportunities to go into management, things like that. I am concerned that 5 to 10 years from now, that there will be perhaps a middle management crisis. Like, I think that you still need like team leads, for instance, right? And there's not going to be enough people that have experience in that. So they're going to have to just promote people that haven't done it before. And those people that haven't done it before are not going to be prepared for it in the least bit. They're going to suck at it. Maybe one should become an expert in preparing data for AI applications. This is, yeah. Well, you know what? I tell you, one of the things that I find a little bit frustrating right now, Lord, is that I think that I know a lot about that subject, but I do not have professional experience in it, unfortunately. So it's kind of hard for me to make that career leap, unfortunately. Remember all of those stories on the obvious lies in the real life? Obvious lies? Well, those charts are, I don't know about what you're saying, but... yeah, not many have. I don't know. There's data engineering is a thing, but... I have so many thoughts, and I'm kind of like, where do I want to go with some of these? The job market is just a really interesting phenomenon right now. But again, I also think that like the number of job openings may be artificially low. Like first of all, the JOLTS number that we get, I just don't think that that's very accurate. I don't think that it really reflects the changes in the markets that a lot of companies put job positions out that are not real, and it's probably at least a quarter of jobs. So if you take a quarter out, then you kind of look at, okay, yeah, there's not enough openings for the people that are looking. And then when you further narrow that down to specific industries like the computer industry, then you really see that like there are more applicants than there are jobs. But I also think that there are some companies that are kind of keeping that artificially low, that probably they should be hiring more people and they should be doing things to expand, but they're not doing so, either because they falsely believe that AI is going to solve those problems for them, or they are waiting to see what happens with Donald Trump's presidency. So my hope is that by March, we see an uptick in hiring. I sure hope so, because if I'm not employed again by March, I'm pretty screwed. I don't know how screwed I am, but it's gonna be difficult. Well, on the market side, 07 is kind of buyer's cost basis. They kind of plowed through that, but then settled back down. So it's still unclear how they're going to take it. I think that there's definitely a possibility of another uptrend. I think I'd be more interested in that than anything, but I need to not think about it because it gets me down. And I've got another day with the kids. And I need to do more script writing. I do have some more shorts coming off of that interview that we did. But I've decided I'm not going to post them until next week after, you know, depending on if TikTok is gone or not. Which, that's going to be an interesting one. I've seen a lot of people being like, oh, look, everybody's going over to Red app. I don't really think that that's a sustainable one. Like, that app is not localized at all. So, like, I just don't see people in the long run sticking around for that. It's just kind of a passing curiosity. I don't think that they're going to go to Facebook, but something you'll see a lot of is everybody's railing against Facebook. And part of that is because they believe that Facebook is primarily behind the bill to ban TikTok, right? But then also they're just, I don't know, man. I kind of think that Mark Zuckerberg is this kind of, he's like the ultimate tech bro. Well, I hope it gets banned on my birthday. Well, is your birthday Sunday? Because they're basically going to turn it off on Sunday unless something happens. I am kind of curious. I really thought that they would have sold it by now, that they would have allowed somebody to buy it. But they've kind of said that, like, we're not going to give you the algorithm. So either way, TikTok as it currently exists dies. But perhaps if you're able to keep the app together, that community can survive a change in the algorithm, you know? Maybe. But why would they just let that die? Well, I think that Tencent would be kind of upset if that died, because they're making so much money from it. But maybe the Communist Party sees TikTok dying as, you know, more favorable towards their ends. I don't know. So probably people go to YouTube Shorts, my guess. So I want to have a few shorts saved up for next week in case. All right. Come check a few things here. Are you going to be able to trade? I see a lot of new ones. I haven't seen any new, only one new one popping up. But I'm more opposed to prop firms than ever. Micro futures exist. Save up a little bit and trade micro futures. You'll trade much longer, and you'll have a wider variety of strategies available to you and have a higher probability of success. Prop firms are basically designed to suck you dry. Yeah, it was the futures desk. I can't remember the name of there was one that the guy was kind of, yeah, no, it is the futures desk. I spoke with Josh and got to see a little bit of that before it gone public. But I'm still like, yeah, but it's still a prop firm. If there was a prop firm that did not make money unless the funded traders made money, it would be a different thing. That's my problem with it. So they really have to be to the point. Now, I think that the futures desk, Josh, he seems to really be like, okay, I see a problem with these and I'm going to try and change it. So that there's something really to it. But I don't really see his changes really fixing the fundamental issue, which is that incentives are misaligned. They make more money off of people buying the combines than they do from people actually making money on a funded account. And so their incentives are directly conflict with yours. They make more money when you fail, is the long and short of it. So until you have that kind of, like, honestly, why would you enter into any kind of agreement where the other person makes, does better if you fail? You're like, oh, let's start a new business. Okay, I'm going to enter into a partnership with this guy that, we're going to start our company. But if our company fails, this guy makes money and you make nothing. What do you think he's going to do? Yeah, he's going to do everything to make it fail. Like, who in their right mind would ever enter into that agreement? But that's what you're doing when you join a prop firm. So that's why I'm opposed to them. Like, if you want a prop firm to, like, let me give you the prime example of this, right? I think that Top Step Trader has always been trustworthy. Like they try and run their business as above board as possible. And yet, you can go down through their rules and everything, and you can kind of see how it's still kind of stacked against you. So, like, even though the people there are trying their hardest to be fair, the fact of the matter is that their incentives are aligned against you, and that dominates the decisions, even if they don't consciously realize it. Suppose I could look at these other ones and add them to my list, huh? You want to do that? Let's do that. Hold on. Make sure I choose the right. Yeah, let's use this one. Okay. So who do we got here? We got Goat Funded, Futures Desk, Future Funded Family. Let's start with that last one, because I haven't heard anything about that. FundedFuturesFamily.com. Elevate your trading journey with Funded Futures Family. Join our Discord. Plans. Okay, so I forget. What is the thing that we're looking at? Okay, do what do you have to do to get a live account? Is the question. No activation fee. There is a 50% consistency rule. We have a help center here. Okay. But it doesn't tell me how I get to the live funded versus the not live funded. Rising benefits back. It's not clear enough on this one. It seems that they are well, I don't know what the clear criteria for live is, but still, so they're in one of these two. They're in one of these two. But do you see how on all of these other ones, I'm able to link to like an actual help article or something to say, simulated funded accounts. Live accounts. Oh, once reaching your fourth payout on the same simulated funded account, then you can upgrade. Okay. There you go. So, clear criteria, but still offers payouts on it. Yeah. Okay. Go funded. Now, have I looked at this one? Maybe not. Okay. Okay, this one is not showing me futures. Forex, metals, indices, stocks. Well, it does say indices, so maybe it does have. No, but no prop fund has a time constraint. It's just that you have to pay again for the next month. You have to pay monthly still. Step 1, step 2, and then goat account. Next. 2-step. What happens when I pass phase 2? On successful completion, your trader's trading accounts enter a comprehensive review. Please ensure, blah, blah, blah. Know your customer. 19, live account activation. Okay, so this one is also can upgrade to live at the firm's discretion, or it can only get payouts after 2 steps. Well, actually, going back. Oh, this is what I wanted. When it happens, we'll automatically receive phase 2. They have a simulated funded account. So they're also in this one. Go funded. I saw ads on some tech company that builds prop firms, and they use Goat Funded as one of them they did. I mean, the funny thing is that I think I could probably start my own funded trader program. I really do. Like, I could probably do it all on my own. It would take me a while, but I think I have all of this. Okay, first you have to make a website, and then like the technical back end sort of things. Okay, use your relationships with Rhythmic and NinjaTrader to, you know, get set up on their things. And then I would have to build a back end that, you know, manages the rules and all of those sorts of things. And I've actually worked on risk management systems that kind of do similar sort of things that are way more advanced. So like I have all the technical skills to do it. You have to lease a seat. I don't know if you do or not. I mean, maybe you do if you're going to have live traders. I'm not sure. Oh, we can do that too. Yeah, probably would need a little bit of seed capital though. Probably would need more capital than I have available. But one of the things that I find really surprising is how easily these firms are able to advertise themselves, you know? Yeah, what about ESAT? I'm not sure. I've spoken with Josh. So the futures desk, is it available now? Yeah, okay, so the thing that's different about the futures desk is that you can customize your plan. So you can basically come in and say, I want these parameters, and this is what I'm going to pass. And so, you know, most prop funds are like, you have this line, this line, this line, and you get to pick one of these, right? Theirs is kind of more like a field like this that you get to pick and go through. Okay. Yeah. So like this again, where I see the futures desk, I think that these guys are genuine. They have like good ideas and everything, but I don't think that they resolve the fundamental problem. Right? They think that funded trader programs are great, and the problem is just that the companies suck. I think that the fundamental setup of the business creates incentives aligned against the traders. So yeah, you can set up your rules. It's still going to be in a way that most people are going to fail. And they have a sim account. Okay. So they are... Oh, no, wait. I don't think that they... Yeah, so I think that they are in this one. Can only get payouts after gaining a live account, 2-step process. Because they're not saying anything about payouts on that thing, but you don't go to a live account immediately. There's only one. Next Gen Futures Trader is the only one that is like true one step. You get funded and immediately you have a live account. Okay. The futures desk must meet drawdown before going to live. So 2-step process. Yes. 7K print in ZT. Wow. Well, they're definitely knocking on the door up there in the treasuries. Okay, good enough. Any other thoughts on that? I'd still say trade a live account on micros. Or just trade it sim. I don't know. I'm going to FAQ. Oh. This one doesn't have something that I can directly link to, unfortunately. It really is like I am the only guy on YouTube that is not, you know, backing these prop firm things, is it? Do they allow you to trade treasuries? That might be interesting. How can he possibly pass a trading combine trading 2 lots in ZN? Oh, I think he absolutely could. I think that you would generally be able to trade 3 or 4. Most of them you'd be able to trade 3 or 4 contracts though. Or do ZB. One of the things that has always kind of driven me crazy is that most of them, they don't say, here's the amount of margin that you get, and here's the day trade margin on all of the individual instruments, or it's nothing like that. It's always, you can trade this many contracts, unless it's a micro, and then they have different sets for micros and stuff. But they don't have like a different qualification for ZN versus ES. And so you can't trade ZN as leveraged as you can ES. Maybe that's intentional. Maybe they want you to trade ES because they know that it's random and people are less likely to be consistent on that. Give you thoughts on their trader. I mean, what would you think the thoughts would be? Like, okay, it's a person that's trading that claims to have had some success in the past, so what? This is a larger problem, is that if you are looking for signs of what is the term that we call for this? Social proof. If you're looking for social proof in trading, you are pretty much always going to be led down somebody that's full of shit, or is naive, frankly. He claims that folks should trade commodities more than equities. I don't know if I agree with that. So with commodities, let's talk about trading commodities versus equities, okay? Commodities have a strong propensity to trend. But when we're talking about that, we're talking about over the period of weeks and months, okay? You get these moves where like that commodity just trends up all year. And if you were long at the beginning of it, the amount of money that you make is just absolutely insane. And this is how momentum strategies work, right? So especially in the beginning, the first kind of quant momentum funds like Renaissance Technology started out doing momentum on commodities. Okay. Equities, the overall equity market has a very strong propensity to just move up and make at least 10% a year. There can be drawdowns as much as 50%, but generally speaking, so there's a really big fat tail, right? Most of the time, you make 5 to 10%, and then once every 5 to 10 years, you would, if you're using leverage, you're going to get destroyed. Okay. But if you're trading individual stocks, now you kind of got a different sort of a setup. It's a completely different edge because, there are days where there's nothing going on in the commodities complex and everything just kind of stays where it is and doesn't do anything. But there's always going to be somewhere to go and get involved in the equity side. Okay. So, especially some of the things that I think a lot of retail traders want to look at, like for patterns. So I wouldn't look at intraday patterns necessarily, like you pull up a 1 minute chart and trade the asset based on that. But you can use technical indicators on daily bars to identify assets to trade for that day, and there is edge in that. And if you're able to identify an asset with the conditions, now you're able to trade in like a consistent set of conditions every day. And there's a huge advantage in that, right? If I'm going to market make in a commodity, then basically I have to understand that commodity, and I have to understand every type of conditions that commodity could possibly be in and how to trade them, which often you can't. To really be like jack of all trades, I think that you'd have to have a decent amount of size to kind of average out the little foibles and stuff. Okay, so I think that if you are a retail trader with limited resources, that you're probably more likely to be able to find consistency trading stocks. In fact, I dare say that probably a majority of people could potentially trade stocks and make money from it. Is just the amount of money that they would make is not very worth it, right? So there's like this, is it profitable? And then there is, are you actually getting a decent return for your efforts, right? And I think that swing trading and stock trading, that a lot more people at least could get to a point where they're actually making money from it, but not enough to where the amount of effort is worth it, right? Probably they would still make more if they just put the money into an index fund, okay? When I come across large amounts of money, like last year we got a little bit of an inheritance. I saved all of it in tax advantaged accounts. I didn't come in and trade it. And I actually was looking, I hadn't looked at it in a while. I looked at it yesterday because I remember my one account, like my basic account. I was getting really frustrated that I couldn't get it above 7,000, but now it's up to 9,000. And actually, my biggest holding is still the stock that was gifted to me from Goldman, and they were up like 6% yesterday. So I made a pretty good. It was like $250 or something like that on the day. I was like, wow. Actually, I should come and look at their chart real quick and see. Are we? Oh, okay. We're not quite to the open, so I kind of wanted to see how they. Well, sometimes the day of is like super crazy, and then it doesn't persist. Yeah, it does kind of look like that's what's happening. Oh, no. Okay, they're okay. Big move in the overnight, and it looks like they're holding it. Okay, cool. Hey, now, back to the subject at hand, though. The advantage to commodities is your ability to manage your risk, okay? Like, the slippage in most cases is one tick. You don't have this huge spread to worry about, all of those sorts of things. So like they're fundamentally different kind of games. I think that the kind of game that we're trying to play makes more sense to do it in a commodity. If I had a larger account, I would probably do stocks too. But then that's the problem over there is that you have to have an account of a certain size to practically trade stocks. Right? So I don't know, man. Like the argument that is it 25K? I'm sorry, you're right. The argument that like commodities are like objectively better to trade stocks, it seems like a naive take to me, right? There's different advantages and disadvantages, and it kind of depends on your goals and the resources available to you, right? Yeah, I think you're right. I think it's 25, which is kind of crazy to me that it's 25K, but whatever. I, as with many people, would think, hey, they should get rid of that rule. Yeah, with their obsession with consumer gambling now, I'm surprised they're still bother having. Well, but that's the whole thing, Uzi, is that Congress doesn't do anything anymore. like honestly, these funded trader programs should be regulated, but there's probably zero chance of it happening because Congress isn't going to make a law about anything related to finance. It requires like a once in 100 years financial event to get them to change anything about the financial system, right? And then if they do change something, they're not going to care about a small issue like that, right? They're not going to do anything about it. So that rule, I mean, maybe someday it'll happen, but because they did do the thing where you can become a qualified investor or whatever it is, right? But I don't think that they did that one for like so people can trade or so that people can get into hedge funds. Or I think the reason that they did that one was so that people can get into private equity, essentially. When I die, my biggest regret will be not being a shitty fucking criminal for real. It's just so easy and encouraged by doing stuff the book is categorically stupid. I mean, if you want to be competitive and you want to make unusual amounts of money, then you probably have to play in an area where the rules are a little bit shifty. Yeah, you don't want to just like objectively do something criminal, right? But you can find these places where the rules are a little bit vague and, you know, nobody's going to do anything until it becomes a really big deal. And then by the time it becomes a really big deal, you've already made your money and it doesn't matter, right? Like Uber. Yeah. But I mean, that's the bigger thing is like, what do you actually want to do? What do you actually want to do? Because I think most people think that what you're actually supposed to want is to just make as much money as possible, right? And when you look at the people that do that, it's not, it doesn't make them happy or fulfilled or anything like that, right? I think that your goals have to be a little bit higher than that, right? Like, I don't want to make money. I want to bring value to the world. Yeah, I need to make a certain amount of money as I do that, but I don't want to make money if that money is coming at the cost of society as a whole, you know? And that's what a lot of people are doing. I really do not believe that the prop firms add value to the industry. I don't. I you know, it's brought a lot of people in, but it's not like making better traders or anything. It's just transferring money from these people that try these combines to the people that are running the prop firm. That's what it does. And they aren't creating value. They aren't, you know, like they aren't making markets more efficient by providing better information about commodity pricing. They're not, because these people are not keeping the combines. Just noise. They're not bringing value. So like, I think I have all the technical skills necessary to create a prop firm. I have zero interest in doing it. I have all of the skills necessary to create my own platform. I think I should go down that route because I think I can make a better platform and that would provide value. Of course, people still have to have good trading strategies, utilize the platform. But I think that people with my platform would have a better chance of finding those than they would without it. Wow, pay taxes and workman's comp on your cleaning company, killing your personal income by 100K. That's crazy. That's a big amount. TSMC's outlook beats estimates. Goldman tells clients puts are cheap, citing potential degross sell-off risk in Q1. Is that better or worse than noobs making donations to hedge funds? You know, noobs can't make donations to hedge funds. Like, even if they pass the tests, the minimum investment required is too high. The space is private equity. I really wonder if the guys over at Y Combinator know anything about that, because I looked around and I couldn't find anything suggesting that they knew anything about it. Oh, look, there's our Korean friend. I was waiting for you to come yesterday because I had seen that they had arrested the president, but I didn't see you. whole thing is crazy. Did the currency ever recover? Let's see here. Do I still have that open here? Yes, I do. Looks like they've been doing... Oh, no, wait. That's a 5-minute. We need to go back to daily charts. That's not right, is it? Can't even find the big decline anymore. Oh, maybe it was this. I don't know. Yes, the president got arrested. New guy. Open up a brokerage account and YOLO a few house payments. At least the prop firms are cheaper than that. I suppose. But like the whole thing is that before that person just wouldn't go into futures trading. Right? Are they better off having traded futures? Probably not. I tell you what, man, this is the big conundrum that we have in our field. Like, okay, you need to have markets. Markets are a necessary thing for society. You need to have people that participate in markets. You need to have people that are experts on the things and to speculate on what prices should be. And you have to have a certain amount of noise. So you have to have a certain amount of people in there that don't know what they're doing and are just providing noise so that there's liquidity and volatility for the people that actually know what they're doing to be able to do their thing. Okay. But does that provide value for those people that become noise traders? No, it does not. No. For most people, futures trading does not bring value to them. What country arrested the president? That's awesome. So in South Korea, the president basically attempted to do a coup, like because he was he was encountering a lot of opposition from the far left party in parliament that controlled parliament. And so he basically tried to like disband parliament. And that failed. And now parliament is like impeaching him and all of this stuff. So yes, 2 days ago, I guess it was, they arrested him. Minister of National Defense and the president is fighting. You know, the first ladies did stock price manipulation on Deutsche Motors Incorporated. I mean, there's a thing, man, is that you know, who are insiders? Who are the people that have an informational the biggest informational advantage? And a lot of that, you know, by and large, I would say that it is politicians and like board members. Yeah. Is there edge in like you know, following these insiders like congressional trades and stuff like that? Maybe. I mean, pretty good chance that most of the edge has already been taken out by the time you get the data, but yes, they have edge, and the people that are making outsized gains are probably like government insider people. Yeah. Yeah. Greg, before these prop firms, I thought a prop firm was one where you go and you sit in a room and trade their money. Yeah. Yep. Greg, I just absolutely despise. So first of all, I personally don't. I try to avoid using the term prop firm. I prefer to call it a funded trader program, because a prop firm implies that they make money by trading the prop firm's money, and that's not what happens. What you looking for, dear? Anyways, a prop firm is a company that makes a profit by trading their money, and they give their money to smaller traders to trade. That's a prop firm. And that is not what these do. I mean, like, in some narrow instances, they give their money to people. But all of the data that we have is that they don't make money on that. They don't make money on that. So they aren't prop firms. They are carnival games. They are carnival games. The game is set up in a way that the majority of people will fail. And they make money from people failing. The fundamental misalignment between the incentives of the company and the traders. What if it was the cost for the combine or for the funded trader thing is only the cost of the data and the platform? So it's like $30 to $50. $30 to $50. And then if you pass, you immediately trade a live account. And the company makes 10% of what you make on that live account. Okay? Now the incentives would be aligned. They don't make any money from people failing. They're going to want as many profitable traders to pass that and trade the live account and make money on that live account. Problem. That's not going to work because the people that pass that one little funded account thing are extremely likely to blow up their accounts afterwards. And you're probably going to lose more on the people trading the funded accounts than you're going to make on them trading the funded accounts. So that business model doesn't work. That tells you something, doesn't it? Constitutional Court is finally calling Democrats to tell what Yoon did. Oh, okay. Well, I kind of think that attempting to disband the legislature should be illegal, but I don't, it's probably a complicated thing, right? But another side of it would be you don't necessarily need to prove how do I put this? Like you can impeach the president and it's a political thing, right? And they can say, well, what we think he did is illegal or shouldn't be allowed. But there's not necessarily a strict law against it, right? Like you might not be able to prove it in a court of law without in a normal court of law where there's like a summary judgment from a judge, but you can within the bounds of the impeachment system. Yes, like casinos, their business model had their revenues tied directly to their traders' failures. Like a casino. And like that's the larger thing here is that you're taking money from people and you're not providing any value back to them. Well, the futures desk, they sound like that they are putting a lot more effort into like having education and so forth like that for traders. We'll see how it works out. We'll see how it goes. I'm sure that they will do well. But I'm still not going to promote prop firms. I'm still not going to promote prop firms. That's the long and short of it. Yoon's approval rating is over 50%. But isn't like a 50% approval rating is kind of low, isn't it? Oh, but then they looked at it and it was a fake survey. That's. I mean, the thing that I struggle with on this one is that everything that I'm hearing really makes it sound like that this guy is a power-hungry maniac that really should have never been put in charge. But the problem is that I see how the propaganda works in my own country, right? Where they will try and make every Republican seem like, he's just absolutely terrible. They did it to Bush. They did it to McCain. They did it to Mitt Romney. You know, and right now Reddit is all in on this you know, Trump is mustache man sort of a thing. Like it's just so silly. I think that a lot of these arguments come from a place that's like they're implying that that leader is going to do a certain thing, like a Holocaust or something like that, but they're not going to outright say that because they know how ridiculous it is. That's how I see it. But man, browsing Reddit yesterday was unbearable, frankly, unbearable. Which DOM is the far? That's the S&P. This right here. That's the SPOOs. Selling off right now, by the way. The scumbaggery of today's prop firms are so bad they charge commissions on their SIM accounts, charging a fee. Well, that makes sense to me because the supposed purpose of the simulated account is to prove that you have enough consistency that they can move you over to a live account. So you gotta understand the evolution of this. My recollection is, and it's been so long, I might have some inaccuracies in here, okay, but my recollection is that when Top Step Trader first started, it was you pass the combine and then you would immediately get a funded account. And what happened was that people would get the funded account and then once they moved on to live, they'd blow up. And so their thinking was, oh, well, they're blowing up for mental issues. Like now that there's money at stake, people lose their heads. And so we're going to kind of ease them into it. We're going to put them on an account where, you know, they can make money from it so that they can deal with those emotions from the actual making money. And there's something to lose because you can lose your funded account. But we're not going to risk our money on it. And then basically how it's evolved into is you really don't get a live account unless you really prove that they're going to lose a ton of money if they don't give it to you, right? And that's the way that most of these work. That's why there is literally only one prop firm, Next Gen Futures Trader, that has a one-step evaluation where once you pass the evaluation, you are immediately given a live funded account. They're the only ones. Everything else, yeah, they'll have like criteria for live, or they will upgrade you to live at their discretion. Two-step processes. Well, there is trade day and earn to trade. Those go straight to live after funding, but they also offer sim payouts. And that's the other thing that's kind of funny is that there's like a professional fee and all of this sort of stuff, and a lot of people don't want to do that, and so they would prefer to do the simulated account. Okay. But either way, the net conclusion that you can make from this is that these aren't people that are making long-term profits. And see, that's the large. I tell you what, man, when I made that last video about prop firms, and I was going into the comments, there was, the people that left negative comments, they all completely missed the main point that I was trying to make. The main point that I was trying to make is that the prop firms and their rules and becoming a funded trader over there is not a good measure of a trader. You should be able to pass the combine 30% of the time just from pure dumb luck. Just from sheer dumb luck. So you've become funded before. That doesn't mean that you're a good trader. They have this whole thing like, oh, well, you just can't pass the combine, so you must be a bad trader. No, it's not a good measure. And you're going to have really, really amazing traders that their strategy just doesn't match the parameters. And in fact, the best traders aren't going to match the parameters, because the best traders are going to go, hey, I'm going to go do something that actually works, and they're going to go trade momentum or what have you, right? So like what Andreas was saying in our interview, that it's like, coming in and day trading with your own money, where and then you're going to live off of your profits. So anytime that you take money to live, you are reducing your capital. It's just a fundamentally bad setup, and pursuing it makes you a bad trader by definition. And I'd say it's the same with the prop shops. Like, it's not going to bring long-term success. Oh wow. So yesterday, somebody made this post on the day trading subreddit where they're like, "Hey GPT, make this strategy for me." And so it made this strategy that it calls the quantum flux edge strategy, which I think is just hilarious. The way that they would that's so classic, like what people would name it, right? And I don't know, it's kind of interesting things, because it basically they say they make the like all of these moving averages, and it's looking for a situation where they all kind of cross together, and they makes this the zone, and then it looks for some other things to say, okay, we're gonna have to move. So by definition, this setup isn't gonna happen very often, I think, is my guess. Anyways, so I took the strategy and I sent it to GPT again, and it was like, well, why might this strategy be ineffective? And it's just the response is just so perfect. The quantum flux edge strategy may be ineffective due to the following reasons: complexity and overfitting. Combining multiple technical indicators increases the risk of overfitting. Overfitting happens when a strategy is too finely tuned to historical data, making it ineffective in the real-world unpredictable markets. The complexity of a strategy may result in false signals and conflicting indicator interpretations, reducing the clarity and efficiency of trade decisions. Ambiguity. The definition of the flex zone is a convergence of EMAs within 5% of average daily range. Could lead to subjective or inconsistent interpretations. Small changes in market volatility or price action could render this condition either too frequent or too rare, affecting its reliability. Reliance on derived indicators. It is a combination of multiple indicators. Each component already has inherent limitations. Merging them amplifies these weaknesses and increases the risk of lagging signals that react too late to price movements. Assumption of a predictable market state. The analogy between markets and quantum mechanics, where states of order and chaos can be exploited predictably, is conceptually interesting but may not hold in practice. Financial markets are driven by complex human behavior and external factors that are not easily modeled with quantum analogies. Non-stationarity in markets where patterns and conditions change over time limits the effectiveness of fixed rules based on assumed transitions between calm and volatile states. And weakness of entropy spike filter. The entropy spike filter assumes that when QFI diverges from price for 3 bars, the market becomes unpredictable. However, market movements frequently exhibit temporary divergences without reliable predictive value. Filtering trades based on this condition could lead to missed opportunities or unnecessary action. So they're saying like the very filter that the whole thing is based on is pretty much a bad setup to trade off of. I agree. Volume dependency. Requiring 20% volume increase on breakouts may be too restrictive or prone to false positives, especially in markets where volume surges are common but do not necessarily indicate sustainable trends. It was just so perfect. So like it comes back to this thing that's like, okay, does if a strategy is a function, is there a profitable function for which the only input to that function is a single 1 minute time price series? It's kind of the key question. And why is that the key question? Because that's what most retail traders are trying to do. They're trying to trade a single asset with only that one asset's chart up. Okay. Well, and what's the answer? Maybe. Like, we haven't found one. At least there's not any publicly available information about. Maybe somebody's found one and they haven't told us. But we haven't found one. So could it exist? I suppose, but could Bigfoot exist? I suppose Bigfoot could exist, but why would you waste your time with it? Like, everything that we know about Bigfoot, it's like somebody comes in, oh, I saw Bigfoot, and then, you know, it turns out to be a hoax. It was a guy in a suit. These sorts of so why, after decades of people trying to search and nobody's ever found a specimen of a Bigfoot that they can show us, why would I spend all of my time looking for Bigfoot? What about this thing makes me think that there's something in this, that I'm gonna find Bigfoot and it's gonna make me famous and rich and stuff? There isn't. And like the thing is I can go through these indicators and here's the setup and it fails. Okay. Why do I think that if I just get the right combination of indicators together, that then all of a sudden that's magically going to result in this profitable strategy? You know, like doesn't there have to be something unique? If we do find that strategy that's profitable, shouldn't there be something unique about that explains why that one works and all of the millions of other ones didn't? But that's where I come in and I'm like, well, but maybe the reason that all of these ones don't work is because there's just not enough actual edge to be pulled from that price series. You need more data. And that's the key difference, because the strategies that we know of that are profitable, because we don't know of a function, we do not know of a strategy whose only input is a single 1 minute time price series that is profitable, but we do know of functions that are profitable. It's just they're taking in different data. And what's the difference? They take in more data. They take in multiple price series. Right? So that provides us a good intuitive reason to believe that the reason that these strategies don't work is because there's not enough information in the 1 minute price series to make good decisions. And that kind of feeds back into what we know about the larger market, that markets are not informationally efficient. We've been told that the current prices reflect all available information, and if you look at a price chart, that is just a history of everything about that market. And we know that that's not true, that markets are not informationally efficient. There's far more volatility than there is changes in information, and there is information that does not get effectively priced into stocks very well. and can kind of sit there and fester for even years before like it comes to the forefront and becomes relevant. And then the majority of market participants are price agnostic. They don't care what the price is, they just have to buy it. So the market prices are not informationally efficient. Ergo, how much edge can you really actually derive from a single price series? And I would say not a lot. Like the whole thing is like, if I have a bunch of different data series, and then I can say, look, this data series is predicting a change in this data series. Now I have an edge. And it kind of gets to the point where it's like, you know what? You can look at these other data series and just ignore price, because you generally know what price is going to do based on these data series instead. And that's what I do. For all these problem scenarios that you're reading, for example, moving averages clustered, couldn't it be coded for the bot to trigger a trade in that scenario? Well, so for the strategy that the guy was describing, it was like that. But what it was saying was this particular, there was one spot where it was not specific enough. So you as the coder would kind of be making some changes, making some decisions about how you interpret that. Okay. But it's also saying, based on the rules, I don't think that this is going to work. That the rules are too restrictive. Like this situation is like hardly ever going to happen. And when it does happen, it's not really going to provide a lot of edge about what it's going to do in the near future. Can you support what you're saying with some sort of a visual? So it does a function of X where X equals the data series, numbers is a data series, okay, of 1 minute time price. Is there a function that exists that is profitable? We don't know. Is there a function that possibly that takes in, X, Y, Z, EDQ, where these are multiple different series? Yes. Momentum. High frequency trading. So what's the difference between this one that we're trying to find profitable and we can't seem to find it? Maybe it exists. What's the difference between this and the ones that we know are profitable? This one takes in multiple data series. This one takes more data. Ergo, my conclusion, my intuitive conclusion theory based on this is that there is not enough informational content within price alone to make a profitable strategy. Okay, I'm not sure what's driving that move there. Fed's Waller inflation data for December was very good. That's what drove that. The Fed's Waller speaking. How come I'm not hearing that on the news? Oh, and you know what? It disconnected on me. I was like, how come I'm not hearing that on my news squawk? My news squawk had pooped out. Oh my. Waller says that if the data continues like this, it is reasonable that more rate cuts could come in the first half of this year. That is significant. And he says if there's a surprise, then they would have to stay on hold, but he's optimistic. You know, I'm feel really like part of me wants to go long here, but I'm not actually seeing like a real change in cumulative delta on this. I'm not actually seeing the orders that I should expect to see based on what I'm hearing. Okay, 06 would probably be better. Okay, that's better. Oh wow, it came back up there real fast. Because I said like, you know, 606 sounds okay. I'm not going to trade it. It seems like it's sort of a setup that normally I would want to take. But. See, if I was buying here, I'd probably be a little bit frustrated at the moment. Body bag, if tracking price isn't predictive of market movements, wouldn't that shoot holes in any and every part of market auction theory? Essentially, yes. Yeah. I mean, maybe not necessarily in the way that you're thinking, but I think generally, yes. I think that we've falsified market auction theory. Like the key part of market auction theory that I dispute is the idea that a price having a lot of volume on it is somehow indicative of something about the value of it. That this is the price that people have agreed is the most accurate price based on currently available information or something like that, right? And if we make a move, it's because the market's feelings on what the accurate price is has changed. That does not match up with the data that we have right now. Because we've been able to explain how a market microstructure leads to these locations, and it is basically just a random occurrence that has nothing to do with what the market participants think about what price is right now. So market auction theory is false, but then this again, what is the real weakness in auction theory? It still endorses some degree of an efficient market, that market prices are somewhat reflective of all available information. And the reality is that they are not reflective at all. Let me put it a different way. Everybody comes into trading with this idea that I want to prove to everybody that I'm a smart person and I'm valuable to society. The market is smart, so if I can defeat the market, then that will be the definitive proof that I am a smart and valuable person. The problem with that is that markets are not smart. Markets are fucking stupid. The reason that trading is so hard is because the markets are so flipping stupid. If the markets were actually a reasonable approximation of like all currently available information, trading would be a lot easier. It would be a lot easier. But because they just do stupid, irrational things all the time that make absolutely no sense based on the available information, that's what makes it so hard. Because you can be smart You can know what the market is going to do, or you not know what the market, but you should know what the market should do, what the price should be based on of all available information, and the market won't go to it. Catch my drift? It kind of flips it on its head, because, and this is what I was kind of trying to get at yesterday, is, okay, you believe that a function exists that takes as its input a single time price data series that is profitable. Why do you want to believe that exists? I think by and large that we want to believe that exists, or that we want to spend time searching for that because of personal ego. That we think that if we can find that will be the vindication that we want in life, to show the world that they've slept on us, right? That's what we want. Once you realize that the market is stupid, now all of a sudden it's kind of like solving the market. It is not actually that validation that you think it is it? Coming in and making a lot of money from the market in most cases just proves that you're a fucking idiot that's willing to bet large amounts of money. But good for you. Taking on risk makes money. But that's all you've shown, is that you're a big risk taker. Is that really what you want to show to the world? That you're a degenerate gambler? Or do you want something more? You want to actually bring value to the world? I've decided that the way that I bring value to the world is more in helping people understand the market and why it does what it does, rather than making money from it myself. Of course, I want to make money from it myself, and I continue to put efforts into it, but that's not the end goal. The end goal is to understand the market. And to help other people understand the market, because I believe that the more people that truly understand the market, the better the decisions that we'll make in society are. And that's how I'm bringing value to society. You understand? So would you then say that the point of control in a volume or market profile is just a coincidence and has no meaning? It has no meaning as to what the fundamentally most accurate price is. Yes. So let me explain what causes it. If you haven't watched my video on this, I have a video where I talk about improving volume profile. It explains this, okay? Let's say that every 5 minutes we have an auction. So you guys all submit limit orders, the price that you think is a fair price. And then at the end of the 5 minutes, we match them up. So you're going to get something like this, where these are all of the offers that people post, right? And these are all of the bids that people post, right? And it'll be something like this, where these are where the people want to sell it is, and here's where the people that want to buy it is, right? And then there's some sort of gulf in the middle, okay? Now, these guys right here where they overlap are the ones that get filled. Some and these people too, right? But so all of these orders that do not get filled stay and will be included in the auction in 5 minutes, right? So now you've got something like this, right? The guys in the middle already got filled, right? So there's this place in the middle where there aren't really actually very many bids and offers. Okay? Now what we do is we say, instead of it being a 5-minute auction where it happens every 5 minutes, let's do it every 1 minute. Let's do it every 1 second, right? Now we're using calculus essentially, right? we can use calculus to define how things are going to happen when we move to a continuous time interval. And when we do that, what we essentially find is that price has a tendency to settle in this place where the supply and demand are at their minimum, where, you know, like these people have already been filled, and so there's not a whole lot of people looking to trade in that particular area. So it's the opposite of what the volume profile people will tell you. They'll tell you, well, this price, it has the most volume because this is the price that people have the most interest in. But that's actually not the case. It's maybe there was a lot of interest in it at the beginning, but they're already filled, and it's just kind of a coincidence that it happened that way. Now there's this kind of hole. And if you get too far out here, you've got too many offers to overcome. And if you go too far down here, you've got too many bids to overcome. And so it just kind of trades in this range. And it gets stuck in that range for so long. You have like the like pace of volume in that area is lower, but it stayed in that area for so long that the amount of volume that trades there becomes higher. And that is why it becomes the point of control. So do you see what I mean when I say that it's a coincidence? It means absolutely nothing as to like what is the fundamentally efficient price. It is an aberration created by market liquidity in the structure of the market. Yeah, well, so let's step back for a second, Buddy Bag. You're saying, I think believing that a proven strategy exists somewhere gives hope that a real significant edge can be found. Well, but a proven strategy does exist. We know that, right? We know that f of xyz PDQ, what I am calling momentum, is that not actually XYZ PDQ, it's actually probably 1,000 data series in some cases. Okay. Momentum. We know that this exists. Does f of x, where we're only looking at a single data series, is that where it's profitable? Does that exist? Why go for this? Why not just go for the one that you already know exists? Yeah, maybe you don't feel like that you have the ability to do this one. Well, but you kind of do. Like, just go and find a momentum ETF. I'm liking the way this is going. Now it's getting the volume. Now it's getting the volume behind it that I was thinking that we should have had. The treasuries. Or let me put it this way. If you go and you start your own business, and it's a successful business, you average 20% a year with a small business run well. Like if it's really about you making money, you probably have a greater chance of being able to start your own business. Like the government puts all of these resources and stuff into like providing funding and things so that people can start small businesses. Like that's really actually the whole economy. Like when you talk about like we create money, the banks are what actually create the money, and they do that by giving out loans. When I say that, am I talking about like home loans and car loans? Well, those are included. But the largest group of that is loans to small businesses. Small businesses print the money by borrowing it from the bank, and then they give that money to you in wages. right? So the whole thing
Block sell.
is set up to help small businesses. If your goal is just making money, why wouldn't you go and start a small business? Why would you go into trade? And I'm telling you again, I really think it's an ego thing. I think maybe for me it was an ego thing. That it's like, if I can solve this problem, that's going to be the thing that proves to the world that I'm smarter than everybody else. Right? And again, what I'm telling you is like what I've realized is that, okay, well, first of all, I do kind of think that I'm smarter than everybody else. But I'm also I kind of think that I'm smarter than the market in some respects. Like, the market is stupid. The market is stupid. Trying to predict what the market is going to do basically involves you having to dumb down. Because if you come in it from the approach of, well, what price should the market be at? Are we above or below that price? You will not make money. Why? Because prices are not informationally efficient. That's what it means. That's what it means, is you can't look at what price should it be and are we above or... That doesn't work. What works is people are going to buy or people are going to sell. How many people are going to buy and sell? What impact on the market is that going to have? How much of that is reflected in the current price, and trade it based off of that? Trying to predict what other people are going to do, and what other people do is often stupid and irrational. So I guess if you figure the market out, you are pretty smart. Okay. But just realize it's not that the market is smart, right? And what does having figured out the market say about you? Doesn't necessarily say the thing that people think it does. That's why all of these people that do solve this puzzle, they don't have the kind of attitude that you would expect. They end up being very humble and all of these things. And why is that? Because they realize that for all of their talents and intelligence, that's not what really actually brought them to success. That the answer was much simpler than that. That the answer was, well, we had access to these big resources. We are able to process more data. We're able to get to the market faster than other people. I'm allowed to take on more risk than other people. And not because they were smarter. I'm not creative enough to run a small business? Well, and here's that. This is this other side of it, is like the trading is kind of presented as this, like, well, if you follow the rules and do the thing, then you should make money from it. So have you heard this whole thing that, like, the education system was really built to create factory workers for America, that they wanted you to be on a strict schedule and working hard and all of these things, and that's not necessarily because that's the best way to educate kids and to teach them all the things that they need to know to work in the modern world. No, it was really, that was like what conditioned them to work in a factory, essentially, and make money for their time. Okay? So the school system, to some extent, absolutely kills creativity. We find that as kids go along in the school system, that their creativity drops because the school system really reinforces conformity. Like, you're supposed to do what they tell you to. There's a right answer and you have to go and you get the right answer, right? So this conception of the market is this perfectly efficient thing, and I just have to figure out what is the perfectly efficient thing and take out the small inefficiencies that possibly exist after that, is very, very attractive to that worker mindset. when the reality is that having success in financial markets really requires that creativity and entrepreneur mindset. Like, if you're not creative enough to run you say to not creative enough to run a small business, but if you feel like you're not that creative, you're probably going to do better starting a business. You don't have to be creative with the business. You just have to look at your market and see what has the greatest need and start a business that basically already exists and that you can copy from somebody else. People do that all the time. There's plenty of businesses I can think of in my area that I think you could start a profitable business from it. Question is really more what would make most sense for me, right? Yeah, in business you can get by simply copying what works. But I think there's another angle to this. It's like, okay, so if the reason why many of us want to take this approach to markets is because we have something to prove. Because, like, honestly, you're talking about, like, the hardest thing you can possibly do. Why would you choose to do that? Right? You think that you have something to prove. Why do you think that you have something to prove? It's because we've built a system that doesn't really value people well. Market prices are not informationally efficient. That means that almost everybody ends up feeling like that they are undervalued or that other people are overvalued. And that's what creates that chip on the shoulder that's like, I'm going to come in and I'm going to prove everybody wrong, right? But once you understand the market, you realize that that's all an illusion, right? That a lot of where you are is kind of just coincidence related to unique circumstances of your life. That does not take away your responsibility for things. It is a system where if you work hard and you do the right things, you can have a certain level of success and you can improve your station in life. That's absolutely true, right? But that chip that we develop, that's basically you've been traumatized by the inefficiency of markets. Is really what that is. And once you understand what the market truly is, you kind of realize that
block cell.
It was pointless having a chip on your shoulder, because what happened really wasn't a reflection of you at all. And what happens to you in relationship to the market is not, if you have success, that's not going to be necessarily a reflection of you either. So it doesn't really resolve the chip on your shoulder. Might as well just not have it. You get what I'm saying? Proving others wrong worked while I bought into selling ZN and sold on a line. When was ZN ever selling? I guess we could have bought it before this Waller's comments. You make it seem like anyone can show up at a bank with a basic business plan and the bank is going to fork over a $250 SBA loan. Well, maybe I'm wrong, but I do kind of think that in certain circumstances, that's basically all you have to do. Yeah. If you have like an actual business plan that shows how the thing is going to make money and you've done that work, you can get loans, man. is, you know, especially if we go back to like 0 interest rates and stuff like that. I'm telling you, man, they were handing it out like candy. They were handing it, and I saw so many stupid businesses get funded. How many local banks do you have in a 100 square mile radius? That's how many opportunities to apply you have to get a loan, really. Well, okay, so really we should take this more applicable to Seth here, right? Because based on that, the real question I think here would be, okay, Seth, why aren't you going and applying for an SBA loan? Right? And the problem that I have is that I do not believe that taking on debt or selling equity is the right way to start that business. I think that for that the big problem is like marketing it and getting people to buy it. And if the platform is just another extension of solving the problems that the NinjaTrader indicators solve, then if I can't sell the NinjaTrader indicators, then why would I be able to sell the platform? Ergo, the best decision for my business is to bootstrap it, to put more effort, put more money into the promotion of the product and getting that message out, and then transitioning it into creating a platform. It's unfortunate that that's the conclusion that I make, because I need a job, man, and I'm starting to get nervous. And that would be an easy solution. I just have my own business, and I can get the loan now, and I can start right now, and get back to a place where my wife just has to worry about the kids, and I can sit in this office and just program all day, because that's really what I want to do. Program and record videos all day. But I don't think that makes sense. Sorry, buzzkill, but that's where. Maybe there's a different kind of business that I can start. There's another issue is that like I know that there's a billion ideas out there that I could probably do, and I just don't really know what's the right. You know, it's like it's really more of a problem of abundance of choice. Really. Now, I don't know. If I were to list out here are the number of business ideas that I have, I don't know if they really... Okay, like we could go through... here's business, even if I don't think that they're good ones. Or even if I don't necessarily believe that they're appropriate for me, or that I would have the skills and stuff to do that. So what are the two that we've kind of looked at the most were a laundry service and stuffed animals. I think a stuffed animals business actually kind of makes a lot of sense because it's mostly air, so like you can get a pretty good margin on it. It's just how do you sell it? How do you break out, get a lot of people to buy your thing? How do you differentiate yourself? That's the challenge on that one. What else? One thing I think about often is that my mom works for somebody that does tax preparation. Kind of seems like you can start a business with that and make a lot of money with it, and there's plenty of room in the market for it. But probably not appropriate for me because I don't have the necessary qualifications. How are you going to differentiate your platform from others, and how are you going to market it? What? I'm in Utah. I live in Utah. I have 2. Okay. I have a platform that is more performant. Most of these platforms are written in C# and Java. There is Sierra charts, but that's got other issues and not memory safe. And I want to be able to write the strategies in Python. There are platforms that allow Python, but it's not really like they're missing other parts, right? So if you had something that was basically like Sierra charts, but you could use Python, that is like the killer feature, because most quantitative work is done in Python. Okay. It will have statistical tools built in. So like I have an indicator that shows you a histogram. Oops, wrong thing. Hold on. I have to make a chart first. Okay. So I can come in and I can do like a statistical analysis of the range. Okay. There's limitations with what I can do in NinjaTrader, right? Like, what if I want to see 2 distributions over top of each other and see how they match up with each other? And I have to program what the histogram is, right? Shouldn't those things be built in? Why aren't those things built in? I have another indicator that I'm not able to give to you because of the libraries that it is dependent on. Let me come back here again. What did I call it? It's like Dicky something. Maybe I don't have it on this one. But basically, it's a test for co-integration, right? These are like pretty basic tools that like some statistical arbitrage tools and so forth are like dependent upon. I've never seen a platform that come with those that actually allows you to do like real quantitative sort of things. Okay. Spreads. There are some platforms with spreads. NinjaTrader doesn't have spreads built in. Cross-instrument trading, NinjaTrader does have that now. I want it to be based on, I want it to be set up to do both stocks and futures. So there's a lot of good futures platforms that have order flow.
Block
There are basically like no stock platforms that are based on order flow. You can kind of use some of the futures-based platforms for stock trading, but it doesn't really quite work right because like you can like have the platform open, but you can't execute on it or whatever the deal is, right? So I could get something together that with the right players and everything so that you could apply order flow just as readily to stocks as you can to futures. That would be pretty major, right? My son woke up a little bit early. We got 15 minutes left. I don't think that the average trader cares what language the code is in that is driving the platform. You care that the platform is fast though, right? You care that the platform doesn't crash on you. You care that there aren't memory safety issues that make the application hackable. Those things do matter. But there is kind of a little bit of a thing that I am kind of going after the algo traders. I'm kind of saying, like, there's all these people that are doing algo trading. You know, like we're doing algo trading in C# and NinjaTrader. And there's other people that are trying to do like momentum strategies in Python. And they have to have like different kinds, you know, like so I can get, sorry, what is the name of this application? I don't even remember. Norgate, I can get historical data about a really large amount of futures instruments from Norgate to do analysis of a momentum strategy with it. But then if I'm going to execute that strategy, I'm going to come over and do it in NinjaTrader because I can't do it in Norgate, right? So they're not together, right? So what I'm really trying to do is I'm trying to create an application where a retail algorithmic trader can do everything in one place. Whereas right now, it's like all kind of like split up and really hard. And, you know, like there's also these issues like, okay, I'm going to do it in Python. Is there a backtester in Python? Well, there's like dozens of backtesters in Python. But like, which one should I actually use? And it kind of like the reasons use one or the other, they don't necessarily make sense because then there's this whole thing of like, okay, but does it support the data that I want? Can I tie it into my platform, right? Whereas here, all the answers are here. And I think that platforms like NinjaTrader were intended to be that way, and I think that they just don't understand enough about it to know where it's not sufficient. Right? Yeah, the percentage of traders that are doing that may be tiny, but more serious traders, especially doing algorithmic stuff. Plus, I think that there's a bunch of other things. Okay. Well, what about a seasonality chart? Like, what is the tendency of that instrument over the year? Right? You can make these charts in Bloomberg. It's not in NinjaTrader. Why isn't it? Is that something that will attract a retail trader to say, oh, yeah, I should use? Yeah, I think that absolutely is. Okay. Some of these things are kind of more about the window management. That's another thing that bothers me is that, like a NinjaTrader, these are all individual windows. And if I want them to all tile correctly, I have to like, you know, adjust the size of the windows and all of these things. And like, if I want to come in and create a new chart, I have to come all the way over here and click new and then open the chart and then do, you know, and it's like a bunch of clicks. Shouldn't I be able to just go da, 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 and it's open? I think I can do that. I think that would be cool. I also think it will look cool. But you're right. A lot of the more key features are R center. That's a risk center. Some platforms have a risk center in it now, but they don't really promote it, which I think is kind of a weird thing. So yeah. So those are some of the things that I want to put in the platform. I mean, part of it is like, what is the difference between these different platforms that already exist that differentiate them? I think that in a lot of the cases that there isn't that significant of a difference. Right? Some things like, I want to write it in Rust. That, you know, like, no retail trader is going to look at that and say it was written in Rust or C++. And I know there are people that they really push that with Sierra charts, but I don't think that that's a driving factor behind why people use that, right? Yeah. Well, many people are indicator junkies. Yeah, well, so like one of the things that will happen though is now that you have these more advanced tools in there, and you're tied into a better ecosystem with Python, you're going to have a huge ecosystem, right? Imagine the NinjaTrader ecosystem or the TradingView ecosystem if it was in Python. How many different indicators that there would be, how many different things that there would be. And I'm going to be able to give them more flexibility on what they create, and I'm going to have more base tools for them to work with. So indicator junkies, yeah, the person that wants to come in and just download indicators all day and look at them and see if they can find edge in them, they're going to love this platform, because nothing will be more powerful in that respect. You know what I mean? Then, on top of all of that, it will have data management, where, you know, the data that I'm downloading, it gives me more control over how I'm saving that data and where I'm saving that data, and when I do a back test, which data set am I using? So I think, and when I look at, well, if someone had an idea, they just pay somebody to code it for them. Well, with our platform, you might not have to, because it'll just be Python. It'll be even easier than ever for you to code it yourself. And there'll be more content out there on how to do it yourself than anywhere, because that's what I'm an expert in, is teaching people how to do that. Hold on a second. Like, I'm sitting here, and I'm like, I don't know if you can hear what I was saying in the other room, but I'm sitting here, and I'm like hearing like, oh, there's autistic screeching. What's going on? He was in the refrigerator, couldn't get down, trying to pull out his soda. He's addicted to caffeine, dude. Already 4 years old and already addicted to the Dr. Pepper. And the wife doesn't have the heart to take it away. Yeah, I don't know. Like here's the thing, is like, how many platforms are there out there? And like, there's new platforms coming out every year, and they do okay, and then they make businesses off of them. And I can make a platform that will beat the pants off of all of them. Shouldn't I be making a platform? Like if I can actually do a platform that well, aren't I kind of like obligated to make it? I kind of feel like I'm obligated to make it at this point. And D says yes. Well, I need $1 million. There are not 1 million. I don't know, man. If you looked at the number of custom indicators that are on TradingView, it's nuts. Sierra makes a killing. I bet they make a lot of money. And I mean, I'm talking about something that I think I would sell. I think that a reasonable price for it would be $1,000 for the base platform, and maybe a monthly fee for certain features or something. Well, that would, Sierra Chart's the big advantage is that there's not an upfront cost. So we could consider different ways that we want it. But I kind of think that the one that would make the most sense would be, no, actually, maybe not. Oh, that's kind of rough because, like, the less of a barrier you put up front there, probably with more people that will make the indicators. So maybe it doesn't make sense for it to be a high upfront cost. I think the reason that I'm thinking it should be $1,000, like, well, that's what NinjaTrader is, and I only need to sell like 10 a month to be okay, right? And that gives me the base for starting the company, right? No, I don't think that the target consumer base would be tiny. I think it's kind of like this. Here you have all traders. And here you have this tiny group of people that are like algo traders, right? And then there's this other section of the algo traders that are doing more advanced things and kind of understand the limitations that they have in these platforms. So my indicators, they serve this group of people. Sure. That's like my base. But that doesn't mean that these larger circles aren't interested in it, right? These people aren't looking for it. These people are looking for it. Okay? But it's still relevant and it helps everybody in these circles. Right? And especially when you get to the point where like you have a huge ecosystem, like really what makes TradingView what it is that you can make an indicator and you post it publicly and then everybody can use it. And so there's like this huge library of indicators that you can go and get, and you just pull them up in the platform. You don't even have to install them like you do on NinjaTrader, right? So we can still grab that demographic. But that's where I'm realizing like, who you're actually going to reach with that though is kind of going to depend on the upfront cost. Because if it is a large upfront cost, then a lot of those people aren't going to do it. I think that maybe, though, it should be like NinjaTrader. Like NinjaTrader, anybody can download and use it. And pretty much anybody can even install the indicators and use it. So, but for live trading, then you have to pay for it, right? So I think I would probably do something along those lines. Yeah, I saw a lot of indicators, and it's amazing how many are similar, with the only difference being something as minor as using typical prices opposing to the close or the way. Yeah. Well, the thing that I think is really funny. So again, I think that the thing that I can kind of give. So there are indicators. My indicator suite that I have in NinjaTrader, you cannot duplicate it in TradingView. They do not have the features to be able to do this stuff, because my indicators are not just running an analysis on price. That's where you kind of think of it as a function again. Is there a function that takes a single time price series? And if you want to have a function that takes multiple data series or brings in a data series that doesn't exist in the platform already, you're hosed. You can't do that in those other platforms. You can do that in NinjaTrader, but there's limitations to it too, right? My indicators are really more about helping you analyze those multiple data series together. Much more complicated thing. Very, very different thing. Platform from the country Colombia? I don't know. Well, and that's the other thing, is that there are people that are making money hand over fist doing platforms. Again, like, even if there wasn't anything hugely groundbreaking about the platform, and I think that there would be, but even if I was just duplicating all of the features of NinjaTrader, it seems to me that there's enough space. There's enough room in the space for you to make good money from it, you know? Do you code Sierra chart indicator and systems? I've done it before. Because people have constantly asked me, you should convert your indicators to Sierra charts. And I was like, okay, well, let's see if they have the stuff that would be necessary. And there are some complications, but they're not necessarily complications. It's just there are certain things that NinjaTrader does for you that Sierra charts doesn't, and I just had to write it myself, right? But I was able to do it. It worked. And I just don't have the time to convert it over to Sierra charts. Yeah, a lot of, well, but so are you familiar with the adaptive CCI? If you've ever looked at CCI and thought that was interesting, I'm gonna show you something cool. Where'd you go? Where's my? Did I move it over here? Oh, I moved it over here. Let's do it on oil. Mm, 1 minute, sure, why not? Maybe we'll change it to daily bars. CCI. Okay. NinjaTrader includes a CCI indicator. There's a period that it comes with, 14. Okay, that's really kind of like more for days. Okay, CCI is kind of useful as an indication of like how much trend there is in something. Okay, so let's change it over today. Okay, so like the higher that this is, the more trend there is, and you can kind of see how like, okay, there's this one and there's this one. Is there, how much trend is there in this area compared to in this area? So CCI is really good at kind of showing you how much trend there is. But there's kind of an issue with it, which is that like maybe 14 days is not the right thing. Like the period, because okay, first you try and optimize and you find the best period, but then like the market can go through regimes where like the best period is 5 and then the best period is 50 and it shifts, right? How do you deal with that? Right? So John Ehlers has all of these fancy methods to deal with this issue. If I can find it here, it's IR CCI. I think it's called that. Oh, maybe I have it up here. IR Adaptive CCI. There you go. So there's a bunch of properties on here about how to display it and everything, but there's not a period. There is a super smoother period. That's something different, but okay. So as an example, right here on this one, when you're looking at the default CCI, it's like it's up, it's down. But when this is clearly a downtrend all the way, when you look at the adaptive CCI, it catches that. The regular CCI doesn't. So there are some advanced statistical tricks and stuff that indicators can do that will improve them. And again, the issue is like with 1 minute bars in a single data series. But if you go in and you make I believe, or at least I think that a place that would be worth researching is building a momentum strategy based on CCI and use the adaptive versions versus the regular version, and you would find that the adaptive version works better, is my bet. There are things like that. But there are also things like things that require like machine learning libraries to use that you can put in. So in TradingView, you can't do that because you don't have access to basically any kind. Like it's PineScript is its own language. So unless the library is in PineScript, you can't do that, right? Whereas with ours, you can hook it up to any kind of LLM, whatever you've got going. You know, because there are things that, you know, really what all an indicator means is that it's drawing data on a chart, right? That all an indicator is drawing data on a chart. Really tells you nothing about what the data that you're drawing on the chart is or the method of analysis that it uses. But the reality is that for most platforms and that for most indicators, that they are just doing some sort of a mathematical operation on the price bars. That is, you know, a relatively straightforward function that you're running on. And they're not doing these more complicated things that machine learning networks do, where they're building out a neural network and setting weightings to everything and doing all of that sort of stuff, right? Like, that's complicated stuff to write on your own. It's really dead simple if you have Python available to you and you're just using pandas and innovate, you know, you put it into pandas and then you pass it into the neural network and it gives you the answers, and it's super crazy how it all works, right? You can't do that in these other platforms. You can do it in NinjaTrader now using C# libraries, but not on the version that I have. You know what I mean? Like, isn't that a game changer? I feel like that's a game changer. I think that there are advanced ways of looking at the market that are basically like just barely out of reach for retail traders. And there's a couple of people that are really smart, like myself, because I'm super smart, that have kind of figured out how to make it work with their platform, but it's kind of janky. And I'm sitting here like, okay, we're just going to make something that does all of this shit out of the box and see if we can even the playing field. I mean, that's the bigger sell. That's, you know, like what is the pitch that I can give you that are going to cause people to want to buy that over other things? We're going to allow you to incorporate more advanced methods of analyzing the market that can even the playing field, allow you to do the things that the firms are doing, that these retail platforms don't really help you with. I don't know what you mean. Is it possible to merge Sierra chart indicators and systems and programming together? I don't know what you mean by that. You know, here again, like Sierra charts, you could probably combine it with some sort of machine learning stuff, but it's C++, so like, it's just this weird thing that like all of this stuff is written in Python for some reason. It's not for some reason, but basically the data science community, they're not necessarily programmers, but they have to be able to program. And they chose Python because it was the easiest, most flexible thing for them. The same reasons that made Python the dominant data analysis language is exactly why I think that it should be the language that is available within your trading platform. And if you want to do something that's highly performant, you can still do it in Rust. Frankly, you would be able to do it in C++. And maybe even other languages if they have like cross-compiler compatibility. So you really get maximum flexibility. In I still don't understand what you're saying. In NinjaTrader, you have indicators separately. Are you talking about the difference between the indicators and the strategy, perhaps? There is an issue there, which is that, you know, like I can add an indicator to a chart, and then I can do all of these crazy things with an indicator, like I can add buttons and all of these sorts of things. And but then there's this, like, the running of the strategy, and sometimes the strategy is not like, you know, is interactive as you want. Like there are limitations with it. And so something that I did one time for somebody else was, I basically made an indicator that was a strategy, because the strategy alone wasn't enough flexibility for him. But really what you should be doing is there should just be things built into the strategy that allow you to manage how the strategy is run better. Like, just as an example, when I run a strategy in NinjaTrader, like all of the once you start running it, all the properties are frozen. When really maybe what I want is a strategy that, like, as part of the strategy, there is human input into it, right? So having things built into the strategy framework to allow for those more easily would be an advantage. No, programming in CR charts, both indicators and systems as a merge. That just does not. Why? What would be the advantage? I don't even know what that means, but perhaps if you tell me what advantage you think that would bring, that might explain to me why you're talking about it. You can read the CCI without it being on the chart? Really? I don't remember exactly how they calculate CCI, so MACD I could believe. I mean, again, it comes back to the fundamental problem is that there's not enough informational content and price alone to bring profitability on intraday bars. But even if it was like one asset, it was daily bars, I don't think that would work either, but probably work better than 1 minute bars. But the reason it wouldn't work on one asset is because the inefficiencies that we know of in the market are things that, like, won't always exist in every market regularly enough. So you have to have a large enough universe of assets to run it against. So anyways, I'm building my own platform. I was going to do some programming stuff to get. I got like 20 exercises left, but it's time for me to go. My kid's running amok in the other room. This is my real frustration. How much of my time I end up sitting in the other room just watching the children. Well, I can pull up my laptop and I can do whatever I'm doing on here on my laptop, but the advantage will be the indicators and systems will be loaded by the user all at once instead of in CR charts. Still not. That doesn't really make sense. I don't know. One of the things that I want my platform to be able to do is to run in a headless mode. So, like, I want you to be able to run the platform where it's just running the command line, and I can tell it to start a strategy or whatever and have it run something without having any of the GUI stuff. So that you come in, you develop your indicator over here, you're doing it in Python, you refresh the chart, you get it until it's working, you got it, it's working and everything. Now all you got to do to run it, to like deploy it to production, is go and put it on a speedy server somewhere and pass the right command line arguments to it. And the application that I'm developing and I'm like kind of testing with is the same one that runs it when it's going automated, right? I still don't, that still doesn't make sense. I mean, aren't all indicators loaded by Sierra charts? Like, I don't understand. This thing is continuing through. We should have taken the trade, man. I guess part of it was like it's a sim account and I don't care, but I could have had 06. Would have been, I don't know if I would have gotten filled on that. But here are all of these other places that I was like too shy about it. Oh, it definitely would have worked. How is that relative to like everything else though? Oh, I'm liking it. I'm liking it. Yeah, that was a pretty good run. I mean, look, there's a long way to go to retrace the issues that we've had. I wonder what does that do to my, because I do have a position in TLT. And this will be the last thing I'll look at here. Let me come and look at my TLT. 'Cause I think it puts me profitable again, but man, what's wrong with 1Password lately? Browser plugin's not working correctly anymore. Yeah, NinjaTrader, you can load indicators separately, or you can load a strategy that has an indicator within. Right. I don't know how Sierra Charts does it, but I'm assuming that it would be pretty relatively similar. But I haven't done strategies in Fidelity, so... Or sorry, Ninja. I haven't done strategies in Sierra Charts. Okay, so I'm up $2 on this move today, but the overall position is down $30. So not terrible, but it's a long way to go still. That was the point of all of that, was the treasuries took a massive hit in December. I think that this is oversold. It's a long way to go. But these two moves up are really encouraging. Really encouraging. Yeah, I should get going. I'm going to try and, well, I want to program and everything, but really I should write scripts. So I think I'm going to pull the laptop out and all of that stuff and try to write script today. When does the wife come back? Late. This sucks, man. Whole life sucks. I want it to be over with. I want to move on to I don't want to end the life. No, but just move on to the next stage. Next job, please. I'm so sick of this. Guys, I will see you tomorrow. Stay excellent.